Hi, welcome to Business Influencers. My name is Chris Salem, your host. Welcome to our show. You found us here at TALRadio, part of the Touch of Life Foundation. We are so proud that this show is almost 2.5 years old. Yes, it's hard to believe that we started back 2.5 years ago, but we want to thank you, the listeners, joining us each and every week, because the show continues to grow because of you. And we are committed each and every week bringing subject matter experts in to talk about their personal experiences and insights to help elevate your level of influence and take your business to the next level. You can also find us also on Apple, Spotify, and our YouTube channel, where you can also watch this in video format as well as audio format. Today's show is being brought to you today by Alumni Direct. Alumni Direct is a new social media community platform dedicated to bringing alumni together from all different generational types, an opportunity to either rekindle old relationships or meet new people for the first time. Now, this is a membership program, meaning that it takes all the noise out of social media. No more of those annoying notifications. You get to come in and generate genuine and authentic relationships on your terms with the types of content that you want to interact with. If you'd like some more information about Alumni Direct, check them out at alumnidirect.com. That's alumnidirect.com. Well, we got a great show here today. We are, especially for those that are looking for new ways to invest and make money, also ways that you can create multi-generational wealth and create a legacy for your loved ones, or any kind of legacy that is important to you to pass on. We're going to be talking about building tax-free multi-generational wealth, and we're going to be here today with a subject matter expert. His name is Chuck DeLadurantey. And Chuck and I have actually had a personal phone call before this actual show, and he is just going to bring a wealth of knowledge here today. And without further ado, we welcome Chuck to the show. Chuck, how you doing today?
Hey, Chris, great. Good to see you on this chilly South Texas day. We're in the middle of a freeze like most of the country, but we're alive and well, and we have running water and heat, and we're staying out of trouble.
Well,
Praise
thank
the
God.
Lord.
I know a few years ago you guys had that, that freak storm and frozen
Oh,
pipes, and we're
did we
used to
ever?
that up here in the Northeast. So yeah,
Yes.
nothing new.
Well, good. Well, thanks for the introduction. And yeah, so multi-generational wealth, people say, well, man, how do I do that? And tax-free, and is this a government program? And so on and so forth. I mean, there is a lot to know. But at the end of the day, like most powerful things, it's simple, but maybe not easy. The not easy part is discipline.
Oh
If you can
yeah.
be disciplined with your savings, if you can find your niche, find your lane, if you will, and stick with it, this is the program that will help you. And so if you've been kind of all over the map and moving from mutual funds to trying to buy penny stocks, or trying to invest in your brother-in-law's oil well, we have a lot of those oil wells in Texas, but
Yes.
nonetheless, this is kind of a safe money approach. And it really is a swing account, okay? So you're going to set up this money, you're going to capitalize, and most people are afraid to capitalize. That means you got to store up some capital and wait for the opportunities. Like right now, if I was a real estate investor larger than I am, and I do some, but I wouldn't call myself a mega real estate investor. But the big guys, they'll tell you, now's the time to step back, get your money in a safe place, and wait, because the prices are going to come down. I think this interest rate thing is driving a lot of people out of the market. That's just one thing. Starting a business, you could use this to move money into a business that you already have, or start a new business. So, what we do, and I'll just kind of cut to the chase, but we'll get into the nitty-gritty details, but we use a very uniquely designed, high cash value whole life insurance policy with a mutual insurance company. And people say, wait a minute, this guy's trying to sell me insurance. What I'm trying to do is educate you on a concept that's really not that well known. Back in the 1980s, very wealthy people, and if you know any, and you ask them if they were around then, they were plowing big bucks.
Well, hey, think about the Rockefellers,
huge.
right? That's what they did
That's
back
right,
in
the
the day.
Rockefellers. Yep. And that's what they did. They set up a family economy, a family bank, a family office, and they used cash value life insurance to do that. But The IRS, as they're apt to do, felt like they weren't getting a big enough chunk of the action. So they put some clampers on it. And so actually now it's more appealing to the average guy, maybe the just above average guy, or maybe you've got a $500,000 and you don't want to buy an annuity and you really want to get in something where you've got liquidity and you've got access to your money. This is what it's all about. It's about protecting your money, getting a guaranteed growth, being to use the same money, the same capitalization, using it in more than one place at the same time. We call our brand of this whole deal private family banking. And the family part comes from our passion to help families look at down the lane to your grandchildren. How are you going to pass along wealth without going through probate, without getting all mixed up with the attorneys, and do it tax-free? So there's a huge feature. Plus, many of my clients are already getting their kids involved in this and creating their own little family bank to pay for college or to get ready to be married or whatever. So that's sort of the entree to get the conversation going.
Wow, I love it. I love it. And I think this is such an important area, especially now as we move forward. We got to be able to take more control over our assets. And what better way to do this through life insurance? If people just would be educated on the fact that it's not what they've been led to believe. It's not like, you're putting money in that's going to work for you. I'm going to just ask you a few questions. I mean, if I'm like somebody who's, maybe has an idea, but I'm really not really sure, if people want to, like, let's say, make, some deposits into an account that they own while continuously at this compounded rate, is that tax-free? Would that be tax-free if they continue to make deposits into this life insurance account, which acts like their own bank?
Absolutely.
Okay.
Yeah. So it grows tax free as long as you're not withdrawing below the basis. And some of you real estate folks don't know what that term means, or investors. There's a basis, basically what you put in. And we don't suggest you draw any money out. You just collateralize your money and borrow back against it. And the rate of the cost of borrowing that same money is less than the compounding that happens. So it not only grows tax-free, but it compounds tax-free. And we know that a penny a day doubled over 30 days equals $5.3 million. Now, we're not going to double our money, but we're certainly going to grow it. And in fact, if you look at the tables in these very specially designed high cash value, I mean 85% of your money available on day one of the policy, way different than what you're going to find at the average whole life policy. Then as it grows, you're getting 1x, 2x, 3x times the money that you put in that particular year. That's an amazing factor. And that has to do with the exponential nature of continuous compound interest. Albert Einstein said compound interest is the eighth wonder of the world. Think about it. A penny a day doubled for 30 days is $5.3 million. I made that offer in a live seminar I did. I said, okay, Joe, do you want this $2 million? And I had two fake $1 million bills. Do you want to take that right now? Or Susie, do you want to do a penny a day doubled? Of course, she went on the come that, the tease was, yeah, the penny a day doubled will be better. And she took the deal. And John, he walked out of there with 2 million. She got 5.3. What a deal. Of course, it was all monopoly money, but it was fun.
I love it. I love it. And if I were like, if you were like to lend your money into your business, let's say you're going to invest in some real estate or something like that. And in terms of that, what about replacing much of what the bank does to you today? Is there like a difference? Like if you take that money out, and you don't you can't maybe replenish it right away. It's not like you get penalized.
Yeah. So this is the fractional reserve banking that the banking system's allowed to do by regulation. This emulates that. It's not going to be 9 times or 10 times. Most people, by the way, don't understand a demand deposit, which is what the technical term is when you make a bank deposit. Do you realize if you look on the Bank of America's website, in the fine print, it says when you make a deposit, you are loaning your money to the bank. A lot of people think they're warehousing their money in the bank. They're actually loaning it. That means that bank has the title to that money, and they can loan it out up to 9 to 10 times with fractional reserve banking. If you follow the money chain, the old adage, follow the money, it will cascade down through the bar. And that's why banks, when people stop borrowing money, banks panic because that's what they thrive on. So this, on a personal level, you can do it 2 times, maybe 3 or 4 times if you follow the money chain. Let's say I want to I've got $50,000 in there and I want to put a down payment on a property. And so I go buy a vacant lot in the town next door and I pay 50 grand out of my policy. Well, now I got to pay it back. But in the meantime, I hold title to this land. Well, if you were down here in South Texas, within a year, that land doubled. I turn around, sell it for 100, take that 50 and put it somewhere else. You see, it can cascade out. And all the while you're growing the basis and your interest and your gain and your dividend, it's compounding at the same time. It's a tremendous opportunity for anybody, really. And if you're healthy, it's even better. If you're young, it's even better. But I didn't start, frankly, till I was in my 60s, and I'm still doing great with it and using it to do my real estate projects.
Wow, I think that's great. And another thing, I like I said, I don't usually have a lot of patience when it comes to paperwork. And when you're filling out paperwork and going through credit checks for loans to do real estate projects, probably not going to have that much of those types of things with your own private bank. I would, again, I don't like to assume, but I figured I'd check with you.
Oh, that's a great question. I'm glad you brought that up because that's the beauty. And, a lot of my newer clients, they're so hesitant. They say, okay, so am I going to have to have a notary sign? I said, wait a minute. You are the banker. You'll see a lot of this, be your own bank. You are the banker. You have 24/7 access to your money on an electronic portal, private to you. You can borrow the money, have it in your account in 5 to 7 days, electronic transfer. You decide how to pay it back. You decide how much, and there's no paperwork. It's a click of a mouse. You can get a paper check if you like. I mean, they offer that still, but most of the people do electronic transfer. But there's no approval because what you're doing, here's the real ticket. Think about it. You take a loan, collateralized loan against your own equity. It doesn't even appear on your credit report. So any of your real estate investors know they only can do 10 Fannie Mae loans. After that, they got to get hard money. They're going to have to give all the dossier on everything they own, every asset. That's not, once you capitalize this, you are the banker and you have control over that cash and access without any questions, forms, or paperwork.
Wow, that is fabulous. And it's just one of those things, again, if you just have, the guidance and the insights like people are getting here right now. And, later we're definitely going to, allow you, Chuck, to, make sure you provide your contact information so people can reach out to find out more information about this. What if people, were to invest in one of these policies, and now we're going to be looking at this as a way now to grow their wealth, allow themselves to finance their own investments, other investments in business. What if they skipped a payment?
Oh, yeah.
What goes on there? Because again, you're right. I know if you skip a payment with a loan, that's a different story.
And that is a great thing that, again, a lot of my clients that are just getting started, and I've got clients at all phases of life and all kinds of income levels, up to the very wealthy, to the starter family, young families, middle-aged families, very wealthy. But all of them, to a degree, seem to stumble at that, where they say, well, okay, what's my payback on this loan? I say, well, you're the banker. If you want to skip a payment, as long as you've got cash value, and they do a little bit of a 6% holdback to protect against you not paying the interest on that loan for a year. But if you want to take a 2-year payment holiday and you've got enough, and we teach you how to make sure you have enough cash value, and as you pay a monthly payment for your premium anyway, you're gaining every month. You decide. So if I want to pay for 12 months and all of a sudden I have a rough patch, especially, again, a lot of real estate agents get into this, and real estate sales, they may have a rough patch where they got no closings for 4 months, 6 months, or they're waiting on a big closing. They can take a payment holiday. You can't do that with your bank without penalties, interest, or them foreclosing on you.
Yeah, so many advantages. I love that. So important. And I'm hoping everyone that's listening is taking notes. And again, this is a show you want to share with people, your colleagues, your peers, and so on. And then also your family. This is so important. So in terms of if they're earning interest continually in dividends, talk a little bit about the advantages again, why they're going to earn more than say typically on average overall with the stock market, or obviously it's not going to be the case in a regular bank. I mean, because all the banks are doing is taking your money as a whole with others, investing it. So you're making pennies on the dollar if you're lucky. But why this is better long term?
Well, twofold. One, the insidious nature of income taxes on gains. A lot of people don't realize that, if you run a chart and you look at the degradation of your value just due to income taxes on gains. So you're outside of paying any taxes on gains. So the better it does, the better it does. And then, 1.05 times 1.05 times 1.05 times 1.05 times 1. If you do the math and just do compound interest that way, you're going to get 5 to 6% interest on your money all the time and never lose. Second part of that point was, if you look at the stock market and you just go to the Dow Jones for the last 23 years, take it from 2000 to 2023 or now 2024. And if you look at the ups and the downs, what people don't realize is the effect of ups and downs. If somebody says, well, the average return, well, you've got to look at positive and negative, and you've got to take like $100,000 and run it through the Dow Jones returns over those 23 or 24 years. Guess what the return really was? 5.74%. 5.74%. I've done the math. I've done it on an Excel spreadsheet. And so and somebody says, well, okay, I like 5.74%. Well, we're not quite getting that, but we're getting the compounding that never goes down. That's where the advantage is, because the guy who rebased his account during COVID, or he had his 401k during the '08 crash go down by 40%, it took him or her a long time to get back to zero. And what happens is twofold. When people lose money in the market, they panic and they start to get riskier in their choices. And that just leads to more problems. Or they bow out of the market and they never recover their basis, right? And they say, hey, I've had enough of this. I lost 40%. I've only gained back 20%. I don't want to lose another 40% in the next bust. I'm getting out. So, in our situation, all boats rise. The insurance company makes money. You make money as a mutual insurance company policyholder because you're an owner, in effect, of that company. And you enjoy in those dividends and those gains. So the twofold effect of the minimizing terrible depreciation of your value due to taxes. And secondly, when you play the market, you're playing the ups and the downs. And maybe there's really smart people out there. Maybe you've done really well. But really, do you understand what the actual implication is of your money over time? And the closer you're to retirement, right, it's a sequence of returns. The last thing you want to do when you're 5 years from retirement is lose 40% of your 401k, because you won't ever recover it. And all of that 4% rule and all that doesn't really exist anymore. The 4% rule is taking out of your nest egg 4% per year to live on. Well, first of all, if you have $2 million, 4% is 80,000. Not bad if you're staying home and watching grandma on the TV. But if you want to travel, if you want to go have fun, you want to play golf, you want to get a boat and quote unquote retire, 80 grand a year, probably not going to get it. And your part of the country, even more so.
Yeah, so true. No, I love it. I love it what you're sharing. And, what do you suggest, Chuck? Like it's, people are hearing this now here on the show. Maybe perhaps they're going to go back and listen to the show again. And now they're going to get a foundation because you've shared some great insights. And now, like people have to get some more information. What are some ways? I mean, obviously, besides getting in touch with you, which they absolutely should be doing at the end, what are some things that you would advise them to do ahead of time before, like, let's say, having that call with you that would now make your job easier to share with them how this particular concept could help them achieve all the wealth that they desire or create the life that they're looking to create, even while they're working. It doesn't mean you have to wait until you retire. I mean, there's some ways that you can do these things while you're obviously still working. What would
Absolutely.
be, yeah, what would you suggest?
Yeah, I'd suggest they start sooner than later.
Yeah.
Don't do what I did and start really late in life. Start soon. Start in your 20s. Start in your 30s. 40s is great too. Like I said, my oldest client is 75. My youngest is 18. So I have a broad sweep. And there's reasons and how we work with those people. But the thing is, they need to start capitalizing. That means start tucking this money away. The second thing, really the first thing, is, do they have control of their money? And if they're in a bunch of consumer debt, we can even show them. We do a debt snowball, somewhat not like the Dave Ramsey approach to the debt snowball. It's very unique, and we use the policy to accelerate their debt payoff. And we do a little calculator. We give them a monthly schedule. So we even work with people who have car loans, credit card loans. I mean, I have a couple of clients with credit card loans at 22%. It's like, that's not good. We're getting rid of that. Well, we use the savings, we compile it, borrow back against, and basically arbitrage the interest rate and get rid of that high debt credit card. But if you're not in consumer debt, you don't have a lot of car loans and credit card loans, it's really first question is, do you really understand your cash flow? Can you find $400 or $500 a month that you can consistently tuck away? Secondly, do you have any kind of a nest egg, an emergency fund outside the market that you're already saving in that we can put into this to jumpstart it and get that capitalization in year one and get you access to that money if you need it? The thing is, sitting in the bank, it's going nowhere. You're not earning anything. You're subjecting yourself to the bank risk. If you're sitting in the market and with all of your money, you're subjecting yourself to total market risk, and you don't have a safe money strategy. So we suggest that.
Wow, that's great. Yeah, thank you for sharing that. So much great information here. So what I was going to suggest is that, when it comes to, investing, a certain amount of money, is there like a certain type amount that you start, or could it be, I mean, obviously I know there's probably minimums when it comes to probably health insurance or excuse me,
Yeah, life
life
insurance.
insurance.
Yeah. There's no minimum technically. I mean, I've done them as small as 200 a month for the younger guys that want to get started and start capitalizing, all the way up to $3,000 a month or more, depends on your income, how much we can get you financially approved. We do a quick financial analysis. If you're going to get over $1 million of life insurance, we'll need a quick financial statement, basically a balance sheet, but we do that with you. It's nothing, doesn't have to be notarized, and it doesn't have to have a CPA type look to it. Just the basic, what do you have in cash? What do you have in assets? What do you have in liabilities? However, there's no minimum and there's kind of no maximum depending, I mean, realistically, people put $20,000 a year in. I have people putting $80,000 a year in for the first 7 years, especially due to those IRS modified endowment contract regulations that came out after the 1980s. But it's all over there in terms of opportunity. The main thing is, do you have the discipline to stick with it for the long run? Because this is a long term, this is a long view, and it's one that provides that swing account where I can be earning money here and know I'm earning money, and also collateralize it and earn money over here at the same time, and take a little bit more risk than I was if I was just putting all my cash in. It's really called the opportunity cost of your cash or capital.
Yeah, no, great point. Love what you shared there. So no, really great information here. And like, I like the fact that you said, this has got to be something that people start early rather than later, because the more you can put in, obviously, the more wealth they're going to build long term here.
Right.
Wow.
Right. And I have a short course. I mean, I don't want to get into the ahead of the curve
Oh,
here.
no. Feel free to talk about that. You can go ahead and talk.
So if they want to get a hold of me, it would be Chuck at privatefamilybanking.com. And I'll send them a couple of things. I'll send them a link to my free short course. It's about 20 minutes to a half an hour. Married couple can sit down and look at it together. And much of what we talked about today is covered there with some graphics and some screen shares that'll be helpful. Secondly, I'll send my free ebook called Protect Your Money Now, How to Build Multi-Generational Wealth Outside of Wall Street and Avoid the Coming Bank Crisis. They'll get those no charge. And then if they'd like, I'll send them a link to my calendar, and we'll get together for a half-hour free consult. And I really don't charge. At this point, I'm actually not charging for any of my coaching time, which is a bargain, I think. As long as they buy, a policy, there's no charge at all.
So in essence, you're educating them, you're answering questions, and as long as they have a policy, they're not paying for any additional coaching. I mean,
they're not, and they get to be part of our client group. We have a client group meeting every quarter, and they can hear ideas of what people are doing with their capital, real estate investment projects, commercial and residential, Amazon businesses, laundry businesses, bakeries, laundromats. I got them all. I got guys that are doing guys and gals that are doing all kinds of things around the country. So I am licensed in like 40 states. I am not selling in, I don't think in Connecticut right now. So I better get my license in Connecticut, if this goes out that way. But I can. I mean, it's just, I'll tell you, this Zoom and internet and everything, has been such a utility for this kind of business. I talk to people every day.
Wow, that's fabulous.
Yeah.
Fabulous.
That's again, that's Chuck at privatefamilybanking.com.
Wow, great information. Well, I know we got a few minutes, and I wanted to share, just anything else that you haven't covered here that you think is definitely required to be shared here. That really drives home the point of today, talking about building tax-free multi-generational wealth.
Yeah, I think that all that's gold and glitters is not what it seems to be. Sometimes we think we've got to go out and make this big kill. It's sort of like deer hunting. If you don't do the setup right, and if you don't get in the blind, if you don't have a good spot, you don't know how to take the shot, you can be out there all day long and miss every one. It's all about preparation. It's about having somebody come alongside you. I do a lot of I take a lot of guys hunting out here on my land, and I get them a deer every time. And they just go, "How do you do that?" I said, "It's all in the setup, man." So I think if that's an analogy that would work, and maybe you have some anti-hunters on the broadcast, I don't know. So if that doesn't work for you, be a fisherman. I don't know. You got to fish where the fish are, right? You got to go out and have that fish finder and go on the right day in the right weather. But this is the second part is not only just doing it right and getting prepared, but it's being in it for the long run and not trying to make that kill and try to get everything all at once. This thing will take off. If I walked you through the numbers today, if you just are in there even 10 years, the thing starts to multiply itself and you really can't stop it. It's a winning solution.
Wow, fabulous. Great information and great. And again, we highly encourage everybody that's listening to reach out to Chuck. I mean, this is the time. And as he says, the time is now, not waiting later, sooner than later. This could mean the difference in where you are and where you desire to be. It's just a matter of now getting some more information and then applying it. And you're getting basically free coaching with it when you purchase a life insurance policy to make this happen. I mean, how better can that be? And I don't see banks doing that, and I don't see the stock market doing that. So,
Amen.
it doesn't get any better. So again, we encourage you to reach out to Chuck, get to know him. We'll also make sure that information is in the show notes of today's show. And again, share this show with somebody, somebody you care about that might be looking for something else to change their life. Just a matter of connecting with the right people. And this is what can be the difference of where you are and where you desire to be. So
I want to add to Chris, I also do annuities, and annuities a whole different product. So if anybody's out there that has a stash of cash and they want to get a fixed income for the rest of their life, guaranteed, we can do annuities too, or annuity and a life insurance combined. It's an interesting thing. Not everybody's at that position in life, but if they're getting older and they've got some money and they want to do an annuity, I do those as well.
Right. Fabulous. Fabulous. Well, we are so excited to have you on the show. Thank you so much for being here. We greatly appreciate it.
Oh, great. Good to be with you.
And thank you, listeners, joining us each and every week here at Business Influencers. Again, we're committed to your success and level of influence. If you like what you heard today, feel free to reach out to us with any comments. And again, we encourage you to reach out to Chuck direct. And again, if there is any content that we'd like to see on a future show, feel free to reach out to us at chris@christophersalem.com. We'd be more than happy to entertain that for a future show for you with another subject matter expert. Till then, everybody, have a great rest of your week, and we'll talk to you next week.